This is the Ask Faleskini podcast, where the modern economy is discussed from a skeptic's perspective. Mr. Faleskini helps you distinguish what is sustainable in our economy and what isn't. Not everything that glitters is gold, and not all mud is dirty. The podcaster Mr. Faleskini provides no-nonsense advice. He had it all, lost it all, went bankrupt multiple times, and is now attempting to come back from zero with sustainable growth. There are numerous coaches and preachers on the internet that preach about positive thinking and how life is all roses if you just care to see it that way. Well, Mr. Faleskini is definitely not one of them. We recommend you ask Faleskini to keep it real. He discusses the darker side of the current economic reality, the side that's more important for your personal and business finance. His first intention is to help you keep what you already have. Not to be a complete party pooper, Mr. Faleskini will also hint at the earning opportunities in the economy today. In order to please the almighty algorithm, please like, share, and subscribe. And now it's time to start taking notes. The mic goes to the podcaster, the one and only Mr. Faleskini.
Welcome to the Ask Faleskini podcast with a guest. I'm proud to present Theo Darringer from New York. Theo is a seasoned businessman despite his young age. He's been working since he was 12 years old. He did a lot of different jobs, and he ended up in investment industry. He was first investing in stocks and options, and then he geniusly figured out that other people would also like to invest, but they lack the ideas which stocks should they pick. So he organized a company that picks stock for their clients. Theo, welcome to the show. Please tell us more about yourself. What is your story?
Thank you very much. Yeah, I mean, you pretty much summed it up right there. My name's Theo Darringer. I live in New York City, and for all intents and purposes, I am a businessman. I used to do pretty much anything. You give me money and I'll do it. Gumball machine business, trading shrimp. I think the list would go up to about 100 things of what I've done. Phone repair as well, trying to flip shoes, some good things, some bad things. But eventually I found that stocks was right for me. So my dad works at a hedge fund, so it was nice. I had access to somebody in the industry. So I was able to pick it up relatively quickly. Maybe with an element of luck, I was allowed some success, some beginner's luck. And so now that's what I do. Right now I do options trading. I trade spreads, bull calls, some complicated stuff, but I also do just investing in blue chip stocks as well. Everything related to stocks I do. And now I have this company, Omega Trades, where I give those stock picks to the clients.
Can you explain how the stock picks work? So what does your client get? And what is the reason why someone should engage with you and get info from you and not collect their own info? Where's your added value?
Yeah, so we have a wide range of clients. Some are absolute beginners. Some have been investing for a few years. But in terms of what they get, so let's say it ranges from experience level. We give reports, which is in-depth analysis, and it uses terms that for the layperson might be pretty complicated. So those who are more experienced in investing, what they get with our service is they get the reports and optional phone calls to discuss. And then they use the analysis. They check in with themselves, say, okay, do I agree with his thesis? If so, they invest in it. On the other hand, somebody who maybe has never even invested before and they're using our service, it's hard for them to read these terms, PE ratio, EBITDA, these different financial terms. It's more difficult. So another part of our service is we talk to these people. Sometimes these are people I know, so I talk to them person to person. Sometimes they're in a different continent, so I call them and we discuss what these terms mean, what my thesis is in layman's terms, instead of talking about 10Ks and 10Qs. So our service, to sum it up, we take people who either aren't experienced or are experienced, and we make sure that they understand our theses. Then once they do, they can decide whether they agree with it or not, and then act on that thesis.
When you talk about your thesis, is that a prediction which bond or which stock will go in which direction?
Yeah, that's right. So we don't do bonds simply because we don't have a lot of people who are starting with a big portfolio value. So I absolutely believe in bonds. And I think somebody who has, say, millions of dollars should invest in bonds. But because most of the people are younger, that's our target demographic, and they have, I think, at most 70,000 to invest with, we give high risk stuff. So stocks would actually be on the lower end of risk. Sometimes we recommend companies such as IBM or British Petroleum, but typically we're also recommending options on those companies. So if somebody we're looking at our pick for an ETF called Skies is a real example we have right now. That if they have $500 and they make 10%, that's only $50. So we try to leverage with options. So we have different risk levels. We don't do bonds, but we do stocks. We do options. And then for people who are more experienced, we do spreads, which is a way of trading options.
So if I understand correctly, your point of view is that people with less money should assume a bit higher risks in order to get something out of their money. Because if they would just buy bonds, they would be the amounts would be negligible. However, with spreads and with options, and if you leverage them, you can make quite a decent amount of money. I saw on your report that you have outperformed S&P 500, I believe.
Yeah, so we returned 32% since we started our picks back in August of last year. So that's by now 10 months. So we returned 32%. S&P, NASDAQ, and Dow Jones returned between 13 and 16%. So the reason why is that we are more leveraged. So while we have returned double of what they have in the same time, we have been in a bull market. So when S&P is up 1% 1 week, we're typically up 2 or 3. But if it's down 1%, we're typically down 2 or 3. So while I do think that there is that element of just leverage, and that's simply why we've outperformed, I've also found that when we give out a thesis, for example, we said that AI, the demand for AI would lead to an increased demand in cloud computing. So we recommended this cloud computing ETF. That cloud computing ETF ended up doing great. And the reason why is because there was unexpected increased demand coming from AI. So we have outperformed. Partly it's because we are very leveraged. But another reason for why we've outperformed is that, yeah, we've made accurate theses that nearly all of them have turned out to be true.
Okay. I know our listeners are aware of ChatGPT and ability to pick stocks and ask for advice via prompting with ChatGPT. What would you say that is different when people go for your services instead of just using ChatGPT for the info?
Yeah, so I have so many things to say about that. Firstly, we don't use AI to write the reports. That would just be cheating. That's just trying to save us time. We don't do that. We write the reports ourselves, or I have people working for me that are analysts and they write the reports, but we don't have AI write anything. The way we use AI is a very broad term. It could be ChatGPT, but at its core, what AI means is it's a neural network. I don't want to get too much into computer science, but the way we use AI is not by writing reports, not by writing anything, but it's we have an algorithm that we developed, and the algorithm is structured in a neural network format, if you will, which is y equals ax plus b. It's I don't want to get too much into the computer science side of things, but the way we use AI is we expedite the process for finding stocks. We use this strategy called sector rotation, where we look at where the economy, where we think it's going to go, and we try to find companies within sectors that will do best. So in a bull market, technology will do best. In a bear market, energy will do best. So we use AI as an algorithm to find those stocks for us. Once it does, then we do our own research on those stocks. Another thing for AI, I used to use ChatGPT just for my personal investing, saying, give me a list of reasons why I should invest in Pepsi-Cola versus Coca-Cola and vice versa. But it gives very inaccurate information. And the reason for this is because it's updated, I think, once every 2 years. So unless you're doing multi-decade investing, I wouldn't suggest you use ChatGPT to come up with theses because it's outdated. It hasn't been updated in a while. It doesn't have information from the past couple months, which is extremely vital if you're choosing anything in investing.
Okay. When you talk about leverage, And how do your clients get leverage? Is there a provider that enables leverage to your client? Who do you recommend as a broker for your clients?
Yeah, so because like I said, most of our clients are starting out, they use something as simple as Robinhood. And you
Mhm.
can get leverage with Robinhood. So Robinhood, Webull too is also pretty popular. You don't need to use Fidelity, Ameritrade, Charles Schwab to get leverage. You can get access now to derivatives such as options pretty easily on any brokerage. You can't get access to bonds on Robinhood, but you can get access to options. So getting leverage maybe 50 years ago was very difficult, but now if you want to return 5x what the underlying ETF would return, it's very easy nowadays, even with just Robinhood.
How do you hedge against inflation? What do you suggest for your clients?
Yeah, so going back to bonds and how we're pretty volatile, inflation being at, what is it now? I think CPI was released yesterday, 2.9%, something like that. It's not that big of a difference. So if I were to have a client, this is all personalized. Like I said, we talked to them over the phone. If I were to have a client who is saying, I do have a lot of money, I do want to invest in bonds, or I do want to invest in something low risk, how should I think about inflation? I would suggest that person would invest in something that is higher risk. Obviously, they accept the downsides, but in terms of looking at if they're in an economy that has very high inflation, 6, 7, 8%, I wouldn't invest recommending in an ETF that tracks the S&P 500 or some other index. I would suggest to combat inflation, definitely invest in securities in general, but also invest in higher risk ones.
Is your recommendation, or are there any pink sheets on your recommendation list? Are there any 1 cent shares or something like that in your recommendation?
Penny stocks, yes. No, there isn't. But I learned that the hard way. I actually, before I had run this, maybe 2 years ago, I had invested in a company called Ocean Pal, and this company I think was worth $3 million. So that, almost nothing when it comes to a company. This was a shipping company, excuse me, headquartered in Athens, Greece. And the reason I had invested in this penny stock was because it had a dividend of, I think, 50%. So I thought, okay, I'll invest in this company, wait 1 quarter, and then I'll get my 50% dividend. What I hadn't realized was that this company, its share price had fallen so much that it looked like it had a 50% dividend. So I think it was at $1, just as an example, it was at $1. They paid a 1% dividend. Then it fell to 2 cents. Now that 1 cent dividend looks like 50%. So anyways, just to keep it simple, stay away from penny stocks because there's a whole bunch of stuff that's just so uncertain. It's not regulated. So no, we don't recommend penny stocks. And I would never recommend those.
Okay. Is there any other trick? Because you're talking about stocks and ETFs, and how do you prepare a mix of that? When would you recommend ETF, and when would you recommend to invest directly in stocks? You also mentioned blue chips. Are blue chips part of the portfolio? Do you recommend just certain picks to your clients, or do you propose a whole portfolio for the clients?
So we propose certain picks over the emails. We send weekly emails with reports, but then on the phone we'll talk. Okay, you have this much in this pick, so I think considering your risk level, you should have this much in this pick. In terms of balancing between ETFs and picks and options and all these things, that's done over the phone too, and it all comes back to their risk level. Somebody with $500, I'm gonna recommend they have maybe 80% in options, 10% in ETFs, 10% in the stock. Whereas somebody with $50,000, I would recommend 5 or 10% in options. So my point is, it really, your risk level matters the most. So if you're getting started investing, the number one thing you need to ask yourself is, how much money do I have? How much do I need or want to make? How much do I expect to make? That's how you find your risk level. Risk level is at the core of your investing. It should be at the core of your decision making when you're looking at, should I invest in bond, options? It's essential.
Okay, when you talk about this like 500, and then you spread it like 80%, it's 400, and then 10%, it's 50. So
Yeah, yeah, yeah.
Robinhood enables you to invest like $50 in one stock. How about stocks
Yeah,
that
so
cost $200, $300 per share, or how do you handle that? Is that a fractional ownership? How do you go about it?
yeah, so I fractional ownership I think is only like 20 years old. It's not that old, but nowadays you can invest in Berkshire Hathaway. I don't even know what that's at. Several hundreds of thousands of dollars. You can invest in that with $20 by using fractional shares, which is you own a fraction of the share. Uh, Robinhood and fractional shares, you can't do that with options though. So one of the issues I do have is to buy an options contract. It might look like it costs $2, but actually because it's 100 shares in the contract, it's $200 to buy, and you can't get fractional shares of options. I don't know why. I don't know what the brokerage is, why the brokerages decided to do that, but to this day you can't buy fractional shares of options. So when it comes to putting $10 in a stock, that's completely fine. Any stock, any ETF, but with options, you do need to have a certain amount of startup capital for that.
Okay. And I would like to know, just curious, do you follow guys that hedge against the market? Is that also part of what you're following?
Yeah, so that would the main way we would do that is through spreads. So at the hedge fund level, this is essential. You need to have risk management. But the way we would do that is if you have a lower risk level, but you still want to invest in options, you absolutely should. But you should do a spread, meaning let's say you're investing in an ETF that's at $10. You think it's going to go to 15. You buy a $10 call and you sell a $20 call. So this hedges risk. If it were to fall to $5, you have that $20 call that you sold where you still collect the premium. I know it's advanced term. Some people might not understand. I understand that, but you could look into credit spreads if you want to buy options, but you still want to hedge against risk.
Okay. How intense is investing with you? How many hours per week your average client spends in let's say optimizing portfolio, buying shares? How intensive is that?
Yeah, well, I try to make it as intense for me and as less intense for the clients because it's a service. They're paying me, and I want to make sure that the whole service is that I do the research for them. So, I mean, to get to kind of talk about personal life, I have my finals coming up, so it's a little difficult right now. But especially over the summer and past few weeks, I've been working very hard to do this analysis. It's maybe on non-academic days, so not now, but usually it's maybe 7 to 8 hours a day when markets are open.
Mhm.
So I'm trying to do as much research as I can. I try to just talk to the clients on the phone. They make the trades on the phone. Then they hang up and they don't have to worry about it for a whole week, unless I text them saying, "Oh, this thing happened. You have to sell immediately." But yeah, the whole point is that I'm working as hard as I can for them, and then they don't have to think about it. That's part of the service as well.
Okay. What are your future plans? Are you going into will you do your own ETF? Will you open your own fund? What's the plan?
Yes. So I'm actually Polish. So, and I've been to Poland. I go there maybe 3 times a year. I've seen the way finance works there. My dad's company has offices there. I've talked to them. I think people in that part of the world are extremely hardworking. So where I see myself going is first college, and then I want to start a hedge fund that trades European markets, Eastern European markets. I think cheap labor is cheaper there. You can get cheap labor there. Also, I think markets aren't as developed. I see what hedge funds are doing in American markets and British markets, Western markets. It would be so hard to beat. You would need billions of dollars and teams of people with PhDs and master's degrees to compete with them. It is much easier to start a hedge fund in a country where there's no high frequency trading, where it's developed very little. So where I see myself going, starting a hedge fund in Poland.
Okay. Thank you very much for all these insights. And please let us know where can people reach you and your company.
Well, thank you very much for having me. Where they can reach me, I would recommend you go to the Omega Trades website. There's a contact page. So you could go to the contact page, write a message. I will be more than happy to respond, ask any questions.
Thank you very much for being my guest tonight.
Thank you very much, Mr. Faleskini.